You are about to find out the key levels for Sage Therapeutics, ticker Sage. Now we are down near enough 50% on the day. What's led to this move? So firstly, they released their earnings, but also they were looking at FDA approval on 2 drugs, and 1 out of the 2 got rejected, and obviously 1 of them got accepted. So that's what's led to this massive decline in price. Now, what are the key levels and what do we want to be paying attention to? So what you can see is firstly these levels between $30.70 and $31.50. This is what our third deviation is. And if you've watched the channel before, you understand standard deviations. You would know when you're below this level, that is considered extremely oversold, because again, 99.7% of data should trade above that third deviation. So whenever we see a sell-off like this, it is definitely a bullish indication that we should start being some buying pressure. But again, it is moving off for fundamental reasons, so we do probably want to be a bit more delayed on these technical entries. So yes, we can be bullish because we are below this level, but again, it is off a catalyst. Definitely be cautious and definitely have defined risk if you're playing this long buy. So that's how I'm looking at it. I am long bias on it for the longer term, but I would be cautious. And if I'm, say, long the shares, I'm buying puts to define that downside risk, because then we don't really need to play with a stop, but we are still defined and hedged if we are wrong. So for the resistances, then, if we do continue up from an intraday perspective, obviously you got the anchored for your app around 71.70 or 21.70, but key levels will be $25 and $26. These are our fourth deviations. Then, like the levels we talked about, $31.50 and $30.70 as some key resistances. And if we start to break this is where we can come back to where we are basically trading to on that Friday, and that will be between the $36.50 and $37, which are our second deviations. And again, if we do continue up any more, that will be around 42 to 42.50. So again, these are basically the key zones of resistances that we want to be paying attention to on it. And again, these can be used in 2 ways. If you think this is going to continue to the downside, it could be ideal waiting for a push back to one of these levels and then adding to a short there and looking to play that downside trend, whether or if you're a long bias trader who likes to play reversals, then obviously looking to get long either below this area or as we kind of hold these supports. If we break above them and hold them, then obviously we can start using the above levels as targets. But again, I would be a bit more kind of skeptical on a stock like this. Again, I will probably look to trade it short bias. I'll probably let it play out for 2-3 days, start seeing how we start to react. But again, if I am taking these shares long, I am going to be defining it with a put. So if we are wrong, you know, we're not losing massive amounts of money. We can define that risk. We know exactly how much we'll lose going into it. But I am liking the chance of this to go to the upside. But again, we give it a few days because these levels will now readjust because we've had such a big move. So over the next few days, you might see these levels actually drop down by a point or two. So again, that's why I tend to give it a few days to play out. Wait for the implied volatility to hopefully decline in the options, and then it can just make a much more successful trade. I hope you guys enjoyed the video. If you did, why don't you check out this video, because you'll probably enjoy that one too.